Welcome to Technical Market Insights, ladies and gentlemen, where we're going to dig into the market through the stock charts. We didn't shoot a video yesterday, so we're going to cover today and yesterday in the overall market. We're going to look at today's biggest winners, biggest losers. We're going to do some scans, look for some buying opportunities, and just discuss what we foresee in the future. But I got Tesla up here for a specific reason. I don't want to forget to talk about it. Somebody asked me to cover it. Somebody actually asked me about it on Monday. So that was the last time we actually shot. Didn't cover it in the video on Monday, but I did talk to him in person. So if anybody knows how we trade, we're going to start off with this real quick. If you watched any of the past videos, if you watched my chart educational video, obviously this is far from oversold. So that's why I told him I wouldn't touch it. Higher high, or this is a lower high than the previous low. Pretty low there, even though the low got bought up here. So we had a higher low, but we're setting lower highs. One thing I don't like about it, plus the car market right now with interest rates, stuff going on in China, I don't know what the fundamental issue is right now with Tesla. I couldn't tell you. I only know what the chart shows me. And honestly, Tesla, let me show you how stupid I feel about Tesla. So if you go back to Tesla, I started trading when I was 18 years old, opened my first brokerage account 23 years ago. I remember Tesla when it was $1. And I told myself, I'm like, that is a stupid speculative stock. They sell one car a year. They're not making any money. They're going to go bankrupt. Man. And the thing, at that time, I was trading speculative biotechs. But also, I'm in the car industry. I work for GM. So, Tesla, I'm just like, that's stupid. Well, needless to say, I'd be up about 20,000% probably right now if I would have bought Tesla back then. But I didn't. Hey. No love lost. Anyway, as far as today goes, I told him, like, no, I wouldn't buy there. Give it some time for it to pull back. The overall market's going to pull back. Of course, somebody else talked them into buying, which, no big deal. Not a big loss. Tesla, if they plan on holding for a long time, go for it. But they did buy on Monday. And let's see, it closed there. And as of right now, they are down 5%. Of course, they asked me today, guys, don't try to, especially with something like that, you're not going to buy Tesla and get rich overnight. Now, he did also buy a call, which that money he's probably going to lose. Told him not to trade options anyway. Told him plan on averaging down when it gets to the bottom Bollinger Band, which it's already at, and oversold. So this might actually test the 200-day moving average. Hopefully it doesn't dump below the 200-day moving average like it did back here and lost 63%. So that's a rundown on Tesla real quick. I would be very cautious because it's close to the 200-day moving average. The highs are dropping down. Car market, and we don't talk about fundamentals a lot here, but high rates, stuff happening around the world, China issues. Tesla does a lot of business in China. Fundamental charts, I kind of hold off. Actually, if I had to bet, yeah, Toyota Motor Company, they would probably be, I mean, obviously we would have bought it, well, after the gap down there. If I'm looking to get into a car company, I like Toyota, Ford, everybody having issues with the strike right now. No go, believe it or not. Actually, don't like telling people about trading options because I don't want them following me because it's very risky. A lot of puts there. If I knew this strike wasn't going in well, done pretty well. But I also had a plan to manage that position and so forth. Now let's get back into the overall market. If you look back at our previous videos, especially Monday, right? Oil was red, everything else was green. And we explained it's just the hourly chart swing. Hourly charts are going to swing, daily charts are going to swing, weekly charts are going to swing, and monthly charts are going to swing. So let's take a real quick dive into oil. As you can see, Monday, oil was overbought. All right, after that pop up gave it some momentum, but it was overbought. So it pulled back. This is Monday. Pulled back on Monday. Didn't even get all the way to the oversold position. It already popped back up. It's overbought again. Might see oil dip down a little tomorrow. Might not. It's not a certain. But as we said in previous videos, oil is really the only bullish sector out there. I could foresee it hitting 83, breaking that high sometime soon. That's just on the chart, but also just knowing what's going on around the world. Now, if you would have bought this when it first hit oversold, which would have been a little premature because it ain't touched the bottom Bollinger Band yet, you could have found support at any of these areas that you should have waited for. But anyway, it got down. If you would have averaged down, if you bought there or even bought around this area, you could have easily got your average right around 75.50. You'd be up about 6%, but when we trade ETFs, we trade leveraged ETFs. So a 2x or a 3x ETF, you'd be up 12, 18%, 20% already. As you can see, it closed almost where it opened today. So like I said, that hourly chart might fluctuate a little bit. But when we're swinging this on the daily, we expect to see red days in between, right? Don't everything go right up and right down, right? It's a roller coaster ride. We're trying to capitalize on the swings. If you know where the swings are, the stock market is a great place to build generational wealth, even if you're just dollar cost averaging all the way to the long term. If you actually understand that you have an advantage, you learn how to read charts, you look at what's going on around you. I mean, we almost put on this channel, we almost put Peter Lynch, Warren Buffett, the intelligent investor, all together with the technicals, and we try to slaughter the market. All right, so that is oil. Once again, I would expect oil to go up. I've seen continue to go up. It's not even overbought yet. Seen a few things in my feed talking about it's going to hit 150 with everything going on. And I think the Israel conflict is going to just escalate. Israel's not, I'm not trying to get into that conversation right now, but anyway. XLU, this is one that couldn't hold the 200-day moving average. This is a utility ETF. Not really much to report on that. It's under the 200-day moving average. We're not going to touch it. Obviously, it swung from oversold to overbought, and it's probably going to dump again to oversold. I mean, we wouldn't have touched it because it's under the 200-day moving average, but as you can see, as I said before, it's very rare, even on crappy stocks or ETFs, that I see it go from oversold, which it hit right here, to overbought, well, at least not breaking even. Now, think if you was able to average down, take a profit, anyway. I mean, besides over here, when it dumped under the 200-day, that was, you would have to do a lot of averaging, but then again, look at that. By the time it got overbought, you would have to wait a little longer, but under the 200-day, we don't mess with it anyway. The Dow Jones, and I didn't expect that, honestly, to even pop over the 200-day. We've been saying since last week, but we did know it was still creeping up into the overbought condition. Popped over the 200-day. Like we said, we don't expect that to hold the 200-day. Expect it to pull back on the daily because it's overbought. As you can see, it did today. So it pulled back. None of this action over yesterday or today is surprising. We had the hourly chart swing. Went over that on Monday. Hourly chart on DIA is a little bit more choppy. Still expected to go to the overbought condition and pull right on back, which it did, and it's back under the 200-day moving average. Guys, it's really just that simple, right? I didn't write 2 books called Simplified Profits because it's complicated. Triple Q, same thing, right? Daily, swung up from oversold to overbought, but as you can see, lower highs, lower lows. We expected this in SMH to swing down. Now one thing, yeah, Monday once again was just the hourly charts bouncing, which we kind of expected. Didn't even make it all the way to the overbought condition. Gap down, bearish. Like I wouldn't. Now the big thing on this, we still got green months everywhere. If you watched at the beginning, probably my first video, we went over the weekly and the monthly, and I expected October to be green, which it still is on everything. SMH might actually turn red. It depends on how rough the end of this month is. As you can see, it's still green, but man, it's really, let's see, it's up 2.6% or 0.26% for the month. That's not a lot. Now, if you go to Dow Jones, it's up 0.5%. Triple Q's up 1.4%. SPY up 0.64%. And like I said, just because I said a green October, don't mean it's going to be like a big green October. This right here, green 0.23%. As you go down, even though the cycle's down, you still got green days. When it goes up, you still got red days, like we just spoke about before. So the big thing is, I thought these weekly charts, so the weekly charts especially, really on everything, did not bounce as strong or as long as I thought they would. Now this candlestick wick, I didn't think that would happen that quick. I thought that might take another week, which would lead us to this week being up here, and then we pull back. Regardless of the matter, there's nothing really bullish or enticing about it. It's going to start trending down just because we're going to do a green month in October, possibly, maybe not. Weeks bounced quicker, but not as strong as I anticipated. You'll have that, but like I've said, I'm not really touching anything in the overall market as far as trading leveraged ETFs. These are usually the ETFs I would trade based on these ETFs. When the market looks good, when it's setting higher highs and higher lows, not lower lows and lower highs. When it starts setting lower lows and lower highs, that's a stock picker's game, and we'll get into some scans here later. Now this is the monthly chart on SMH. I mean, look at that, ladies and gentlemen. That would have been the time to buy when it was oversold. Like I said, monthly charts are going to swing, weekly charts are going to swing, daily, everything's going to swing. You'd be up 70% in 8 months. Now I forecasted back here, I want to say it was actually July 16th, that I believe 120 would be a healthy pullback on SMH. You don't have to like it, but pullbacks are healthy. And I based that on this 20 bar moving average in the middle of the Bollinger Bands, which is, I think back then when I called it, it was, right around 120. But I could see it pulling back there. I really doubt it's going to go back to the overbought condition or oversold condition on the monthly, unless things heat up rapidly. Regardless, we are always looking for bullish charts. Okay, this isn't a bullish chart right now, so I'm not trading it or its leveraged ETF. If I'm dollar cost averaging, I'm stacking cash. Heck, I might want to buy a billboard in a couple months instead of dumping a bunch of money in SMH, right? The stock market isn't the only place to put money. You can buy businesses, you can do whatever you want with your money. The stock market is a great place to build wealth, but just be educated and just know what you're buying. I mean, heck, if I was able to, depending on how much money you're dumping in the market, yeah, you could have stacked that money somewhere else right now and not been down on it, bought a business that could be making you more money than the money in the market. Anyway, let's get back into overall market. XBY, that was trash, just waiting to happen. That's a head and shoulders pattern. When we went over the chart reading, educational video, I told you I wasn't going to get into a bunch of patterns because we'd have to find them and kind of go through them. But this right here, anytime you see a shoulder, you see how that looks like a shoulder, that looks like a head, and then a shoulder. I mean, you kind of got the line, and that was right on the 200-day moving average. If you go to my stock Twitch, you can see where I said that would be low 70s. I really didn't realize the price, but back here, I said that's going to hit low 70s and possibly 60s. Man, where's that other chart? Yeah, I said if it broke through 70, you would probably see low 60s based on this weekly chart. Look at that. That is where I would expect that to head. Right? That's a pretty good support area right there. So if you're an XBY, now personally, I'm not going to touch it because it's under the 200-day on the daily. But look at that weekly chart. Look at that support. Let's see how it looks on the month. Yeah, look at that monthly chart. There's actually a lot of support right there on the monthly chart, but it does look like it went lower. Hopefully this is the bottom for XBY. I mean, right there, I mean, you got 68 to 63. Might leave a wick in October or November on that and start heading back up. Hopefully for anybody in it, they end up making money. All right, so that's the overall market. We're still expecting things to trend down. Everything's still busting out from the overbought condition. We expect it to hit oversold. And you can put any news you want to correlate with it. You can go back and look at all the swings possible. There's always news to coordinate with it, but if you just swing the charts, I'm telling you, you'll come out way ahead of the news. All right, so let's take a look at what is trending in the market as far as what the biggest losers are, the biggest winners. As always in the overall market, before I even click, I'm going to guess. I bet it's biotech. The biggest winners and the biggest losers. Let's see. Man, no. I was wrong on the first one. We got NUS, which is a consumer defensive packaged food. Let's see what the news is. Let's see. Oh, okay. So it looks like they issue some more shares. So this company isn't making enough money. So a lot of companies, especially speculative companies, raise monies by issuing stock. I've seen that so many times on speculative companies that ain't making money. They, right before news is happening, they have to raise more money. They take a chance and issue it before like an FDA approval or something, and the stock drops. Looks like that's what we got here, but man, I don't know how many episodes we're going to see this on the biggest losers and biggest winners. I'm going to say probably a lot. Look at that. After it crossed under the 200-day moving average, I bet we're down about 90%, 96%. Man, you could almost save your entire portfolio just by getting out when it dumped under the 200-day moving average. If your entire position in that company, anyway, whatever. Man, I struck out twice. This isn't pharmaceutical either. Looking over there, you see if XBY had a good day, but it's down 3%, so it didn't. Man, my eyes just going up with that 200-day. Is that another one? 98%, and another one since it crosses. Getting out when it crosses under the 200 days is going to save you a ton of bloodbaths. No matter if it's in, now here, like I said, you might get some to dip under and then rally up above. I wouldn't shed no tears over that one because it's going to, that rule is going to save you from far more losses and it's going to keep you from profit. Anyway, this is a media company. Color Star Technology. We would not be in this. It's under $5. It's under the 200-day, and the chart looks like trash. So for everybody in it, it's not personal. Just trying to educate. Start buying things that actually look good. Learn how to read a chart. Let's see what we got here in the news. I mean, that was 130, 2020. That's great. We ain't got news on this, guys. They just dump, just a dump, just because it's a poor stock. Man, another one that's not a biotech. I'm striking out today. Every other video is dead on. So yeah, I mean, this thing hasn't even developed a 200-day moving average. So I wouldn't even be in it. It does kind of look like it's trending up, but even then, you've been out up here when it was overbought. Might have made 25% in 15 days trading that, but no, I wouldn't have touched it. Let's look at some of the biggest winners. Tired of looking at losers. We don't like losers. We don't take L's. Falcons Beyond Global. I don't even know what that is, but it's only been trading for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Wouldn't touch. Just so you guys get a glance, just so you can see. I'm sure there's plenty of people that put their money, whether it's here or here, in this one. It's 38, 40 bucks. And they're down about 65%. Guys, always have a strategy, have a checklist, and have a, I mean, obviously you want to have a strategy to enter and exit by taking profit. I just don't know what anybody's strategy would have been on this. If it's, maybe somebody talked you into buying it, I don't know. Maybe you can reply in the comments if you bought it. Just educate me a little bit why you buy that. I don't know. Like I said, and any feedback is always welcome. You can tell me you hate me. I get that a lot. My goal is for us to make money together, for me to help you not make the same mistakes I made 15, 20 years ago. ICU. Looks like it's been in ICU. It's down. Somebody's bought this from right around 20. I mean, yeah, they've done lost 77 cents right now. Yeah, I mean, it's, and another one under the 200 day that has dropped about 90-something%. Don't get me wrong, it's one of the biggest winners in the day. So is this. But why would you be in it? Look at that. This is a straight. I mean, if you don't want to go to the casino, I guess pick some stuff up like this, see if it makes you some money. We got, you know what? It's crazy. I don't think any of these have really been. That was a biotech. Okay. Yeah, a lot of them ain't biotechs. Shift Technologies. This is a car dealership. Like I said, it's very rare you actually see car dealerships with publicly traded stocks. I'm in that industry. I mean, besides like someone tip them up, Penske, something like that, and then the manufacturers, obviously, but those ain't the dealerships. You got like Carvana, stuff like that. I mean, once again, another 90-something%, almost 100% on the 200-day moving average. So whoop-de-doo. If somebody's getting excited about this and jumping in this because it's up 58% today, or maybe they jumped in it when it was up 17% then, and then they dropped down, 10%, and then there's nothing about this that excites me. I mean, if I was gambling, if I took a gamble right here and made a little bit, but man, I'd lock those profits in quick. You know what they say, if you don't lock your profits in a casino and leave, they take it back. That's exactly how the stock market is. And another one, your biggest gainer of the day, which is probably down almost 100% since it's dropped under the 200 day. All right, guys, I'm done with the public U.S. common stocks. I'm going to the high cap 1000. I'm going to filter that for any bullish stocks that's oversold. But first, we'll filter these for any. Let's take a look at the high cap. It's mainly what we're going to be trading and being anyway. When you first look at this, you should be like, I'm out. It's under the 200 day. I would never been in that 10% loser. Under the 200 day, man, look at that. 25% in a month since it dropped under the 200 day. I've never been in that loser. I mean, who wants to hold airlines anyway? Might have been some possible swings on that, but there's nothing. I want to see a stock chart that entices me. Like, man, that's beautiful. Look at those swings. Look at the company. Look at the highs and the lows. It's oversold. Looks amazing. I want to put my money to work there. That's not it, ladies and gentlemen. And neither is this third. This is one of those car companies like trying to be like Tesla, down 84% in the last almost 2 years since it dropped under the 200 day. When it was over the 200 day, it had a good run. It made about 115%, but we wouldn't be in that. For everybody that is, don't take it personal. Raku. I don't know if this company makes money or not as PE. I've seen it a lot. Never traded it. I think it's came up on some of my scans right around here as far as overbought over the 200-day. So, I mean, those are some big rips right there as far as like trading. You could have locked in 20% 3 times from oversold to overbought, oversold to over. But I don't like it, and I have a feeling the company in general, I'm not sure what the PE is, so I don't want to put my foot in my mouth, but I don't think it's pretty good, especially considering that this is probably like another 80% drop under the 200 days. Yeah, 80%. But remember, anytime it gets oversold and we see the 200-day moving average creeping up, we kind of stay away, especially like this hasn't been trending that long. Well, let's say you did buy this. What you need to do is either A, lock in your losses, or keep your average low and take profit when it gets overbought again, which it was just overbought right there. So hopefully if you did get in when it was oversold, you was able to average down, take your profit there. It's oversold again under the 200. Anyway, we're out. Let's look at some of the 4 biggest losers on this. I don't want to go through them all, ladies and gentlemen. Our 4 biggest winners. This right here is actually kind of like the company has, I remember exactly what it sells for insulin, or for diabetes. And I believe I'll probably swung trade it sometimes. But guys, this is why if you like a company, I mean, if you want to hold this for 10 years, that's fine. But look at the 10-year performance on this thing. That's probably not 10 years, because it was only 3 years. Negative 13%. Where if you would have just been scanning and looking to put money to work temporarily, you would have been able to take advantage of all these swings right here. What's this one? I mean, 11% in 18 days. So I mean, you could have locked in profit after profit. If you want to own the company, just leave your profit in it, right? No loss if it's only profit, and just let it ride. If it crosses under that 200-day, we're out. Had a good day today, but what does that mean to you? Unless you bought yesterday. I mean, same thing. Biggest winner under the 200-day. Abbott, nothing we'd be in. So you can consider that a good thing or a bad thing that we weren't in any of the biggest winners or losers. But even the biggest winners on these charts are losers. Now right here, this is the sector I've been telling people is the only thing. If I'm buying something on a pullback, it would be this, unless we find another bullish stock, which we'll look at here in a second. I mean, that's up 10% in 14 days. So those are the charts we're looking for, right? I mean, look at that. I think MPC is actually one that yeah. So last week, actually Friday, when I said oil's oversold, but you guys know I like waiting to see if it just bottom Bollinger Band as well, which it did. We've been right about here, actually. As far as USO goes, I think it was 10.3, somewhere right around here. We've been buying. You'd be up 8% in 14 days versus the overall market trending the other way. So those are the nice looking charts we're looking at. I mean, heck, when that broke over the 200-day, it ran 23% in a month. That's crazy. And that's not one of the biggest movers, but anyway, that's that. So that's your biggest movers as far as winning and losing. Healthcare, we wouldn't have been in. Now let's filter this to bullish oversold stocks. What do we see? WDC, that's it. If you bought this back here, you probably love it here. Down 40%, just saying. But it has started trending up. Crossed back over the 200-day. Looks like it's holding the 200-day and swinging. I mean, about 15% of swing. Now, when I put my scans together, I put them at 30, which isn't oversold. Technically, you're waiting for 25 or 20 and below. So this ain't technically oversold yet, but I just put them a little higher just because I might want to see it, because I might want to trade it. I might not. But I definitely want to see it and make that decision. Right now, I'm waiting for the overall market to finish pulling back. As you can see, still heading that way. There's not many bullish oversold stocks out there, so that's in high cap 1000, and this is in the U.S. common stocks. WDC came up again. I think we wouldn't be in that, not buying that. This is that coal stock I think came up the other day when we did Monday. Yeah, you can see it. If you would have bought on Monday when it's oversold, you'd be up about 3%, but I don't like it. It's not, the bottom Bollinger Band's creeping up quick. It still hasn't touched it. You still see a little bit lower. Not a fan of that, and I'm really not a fan of that, ladies and gentlemen. Let's look at the ETFs as bullish and oversold. So we talked about this on Monday. Oversold. Could be a good 15. Actually, yeah, we talked about this on Monday. The 20% swing trade. But as always, trade with a strategy that's in the book that I've gone over so many times. Make sure you got money to continue to average down your position in case it keeps going down. Because if you go all in, you got two options. Well, three. When it goes down as far as you can handle and you can't stomach it no more, you lock in your losses, which a lot of people do, and they compound losses over time. Or you just become a bag holder and you just hold it, hoping one day you break even. Or you continue to manage that position and you lower your cost average and lock in profits when it gets to the overbought territory. Now, CTA, I did see this earlier. I don't even know what this is. Simplified Managed Future Strategy ETF. I guess this ETF is trading futures and wants you to invest in it. To me, it ain't worth the swing. It's possible 4% with the overall market and 200. I mean, you could easily lose more. The upward swing ain't worth it. I'm looking for 17, 20% swings, maybe 30. That's why I trade leverage ETFs. I'm looking for stocks that make money. And ladies and gentlemen, if you just want to put your money to work, save up cash, buy a business. That's all you're doing when you buy a stock. You're just buying a portion of a business. Just know what you're doing before you do that. All right, so that is it. Let's look at the ETFs. Let's see the biggest gainers and losers in the ETFs. So whatever that is, long VIX. That's one of the reasons I didn't want to click on this, because it's probably a bunch of bull crap. And ladies and gentlemen, there's no point really going through that. That is Tom's vehicle. Yeah, I'm gonna keep that filtered. Well, ladies and gentlemen, that is it. If you haven't subscribed yet, please do. Share, like, tell your friends. Like I said, it's a great place, the stock market is, to build generational wealth. Just know what you're doing, have a strategy, keep it simple. That way you can sleep at night. Because, trust me, I've been there. You're checking. A lot of you guys are going to be checking all night long, checking in the morning, seeing if your calls or your puts are destroyed your account, seeing if the gambles you take actually pay off. Guys, you could stack up money quick and put it to work in other ways before you buy garbage stocks in the stock market. To make generational wealth in the stock market, you really got to put your money to work wisely. Yeah, you can dollar cost average an SPY or VOO your entire life. You'll probably still do pretty well because you're investing that money, probably dripping the dividends. But the more you educate yourself, the bigger advantage you can have in this market and just straight dominate. How do you think Warren Buffett made billions in the market? By double, 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 double. Money's a doubling game. Learn how to double your money. Hit subscribe. Peace. I'm out.